The second week of 2022 and the venture world is in full swing and action. Andreessen Horowitz raised $9 billion and other stories from last week in this video. Everything about entrepreneurship, venture capital, and investment. I started working with startups 15 years ago in a time in Europe when there was almost no money on the market. I started out in deep tech, life science. It was a very investor-friendly and entrepreneur-unfriendly time. No money at all, few hundred millions at most in 2006. When I read today the CV Insights research report, 2021 global private tech funding reaches record high of $631 billion. $631 billion invested in tech companies. Isn't that amazing? When I look in the report, I read global venture funding reached a record of $631 billion in 2021, more than double the 2020 mark of $294 billion. Q4 21 closed the year with an all-time high of $176 billion in funding, the sixth straight quarter of growth. All regions saw record funding, signaling the globalization of innovation capital. The US was by far the leading region for total dollars, followed by Asia, Europe only on third place, and Latin America. And I believe that soon the annual investments in the tech area will be of similar size than the market capitalization of Bitcoin, close to $1 trillion. No wonder that Andreessen Horowitz raises $9 billion across 3 new funds for startup investments. And also in the CV Insight report, Andreessen Horowitz is named as the 4th largest venture fund globally, with more than 240 investments in mostly the most successful companies that we have today. Reuters cites from a blog post, the firm raised $1.5 billion for a biotech-focused fund, which is great and amazing because still in early stage investments in biotech and life science, there is a lot of capital missing and there are many opportunities out there. $5 billion for a growth fund meant for scaling startups and $2.5 billion for a venture fund, it said in a blog post on Friday. Tech seems to be taking up speed also in 2022. Thank God that it's going in the right direction. One of the most important questions always is, how can we value companies at seed stage? What's the proper valuation when the founders only have a pitch deck, a great vision, a team, and a great plan, but no structures, no assets, no revenues? Y Combinator sets out a new deal that sparks potentially fear in seed investors. Well, it's a clickbait headline, of course. But the great thing is that Y Combinator sets a new standard. And on Monday, Y Combinator said the organization would offer an additional $375,000 in evaluation determined by investors after the company, in addition to the usual $125,000 investment in startups in exchange for a 7% stakes, which, if I remember it right, comes close to a valuation of roughly $1.75 million. This arrangement, which reflects the tendency of venture capital to larger checks, should help founders seeking more cash in advance. It's also a boon to Y Combinator, with about 1,000 startups graduating from the training program each year to take more equity ownership. And also Europe is developing very well. Europe's unicorn herd multiplies as we see investments more than doubled in 2021. So where is the European VC funding going? Within Europe, 40 billion, or 1/3 of all venture funding last year went to seed and early stage startups. That's not much less than the total funding raised for each year in 2020 and 2019. When I think back that about 10 years ago, this number was about 8 billion euros only. That's it from this week. Have a great week ahead and tune in next Monday. Have a great day.